Welcome back to another episode of our City by City Market Pressure Review series. I'm Jong, the Senior Research Analyst here at InvestorKit. And in this episode, we are going to look at the Victorian city of Ballarat. In the past 2 years and a half, Ballarat's house market has been declining. Back in mid-2022, the median house price was once $600,000. But now the median house price is just $525,000. That is 12.5% or 1/8 lower than its last peak. In 2025, will Ballarat continue to decline or will it start growing? Let's try to find out today with 10 charts. Before we go through the charts, if you're here, chances are you're serious about property investment, whether you're just starting out or looking to scale up. But research alone is not enough. If you're ready to make smart and data-backed moves, why not take the next step? InvestorKit offers a free 15-minute discovery call. No fluff, no pressure. It's just a quick call to understand your goals and see if we are the right fit to help you invest with confidence and build a high-performing portfolio. Check the link below or head to investorkit.com.au. Now let's get started. As always, the 10 charts will cover Ballarat's economic and demographic trends, the trends in the sales market, and the trends in the rental market. And in the end, after all the 10 charts, I will give you our prediction on Ballarat's market performance in the coming 6 to 12 months based on what we've seen in the 10 charts. Now, let's look at the first chart. The first chart is an overview of Ballarat's market performance. At the moment, price pressure and incoming supply score the lowest, just 1 out of 5. This is because both the established supply and incoming supply are higher than demand. At the same time, rental pressure is balanced, rental yield is improving, affordability has improved from overvalued 2 years ago to now undervalued. Growth cycle-wise, Ballarat is at the trough, collecting strength to enter the next expansion phase or the next growth phase. Population and migration trends. In the past 7 years, the population growth rates in Ballarat has been quite steady, ranging from 1.7% to around 2.3%. And those growth rates are quite healthy, and that is at least partially contributed by the large amount of new housing supply in Ballarat, attracting more and more residents moving from other cities, especially Melbourne, to Ballarat. Internal migration and overseas migration have both been positive over years, except during the pandemic border closure period. After the pandemic, internal migration has come down to the long-term average level, but at the same time, overseas migration has improved. Now, the local economy. From chart 3, we can tell that the local economy in Ballarat is still healthy. On the one hand, the unemployment rate, although increased since 2023 as interest rates went up, it has stabilized at around 4.8% in 2024, and it's well under its last decade's average. And on the other hand, the number of job opportunities is still higher than the pre-pandemic level by around 50%. And that is a sign of an active job market. So the active local economy combined with the healthy population growth rates are forming a fairly strong foundation for Ballarat's housing market recovery in the coming few years. Now the sales market trends. As we can see in chart 4, the house prices in Ballarat are still declining into 2025. And that is because of the low market pressure. That can be seen in several elements. One is the sale days on market. Sale days on market in Ballarat has been much elevated compared to 2 years ago. At the end of 2024 and the beginning of 2025, we are seeing this downward trend in days on market. It can be a sign of a market pressure recovery, but we need to see more decline for the market pressure to really improve. Similarly, the inventory level in Ballarat has been declining in 2024. This is because the monthly sales volume has slightly increased over the past year. And at the same time, the number of for sale listings or the supply level has decreased, especially over the second half of 2024. However, despite the declining trend, the inventory level is still high, around 6 months of stock. That is much higher than the balance level of 3 to 4 months. So to really see material improvement in price growth, we want to see more significant reduction in the inventory level. Now, the reason why there's so much supply in Ballarat may lie in this chart 6. In the past decade, Ballarat has seen a lot of new house construction activities, especially the house and land package projects. In 2019 to 2023, Ballarat's trend line even surpassed our high building approval rate benchmark trend line, meaning that over that time, it was among the regions with the highest building approval rates. Good news is, the building approval rate in Ballarat has been trending downward since 2022. So without so much extra supply keeping coming to the market, and at the same time, more and more people moving to Ballarat, as we've seen in chart 2, where both internal migration and overseas migration are positive, over time, the high amount of housing supply will be absorbed, and Ballarat's housing market will finally reach a balance between supply and demand. Ballarat's house price growth wasn't as impressive as the other big regional cities, both in the past 5 years and in the past 10 years. In the past 10 years, the total amount of house price increase was 81%. That is around 6% per year, very much in line with the long-term average growth rate. That means that in the medium term, when Ballarat's market pressure improves to a healthy to high level, there's plenty of room for it to grow. Rental market trends. Vacancy rate in Ballarat has increased from below 1% to the current 1.4%. Although 1.4% is still lower than the 2% high pressure benchmark, it is actually higher than the current national average of 1.1 to 1.2%. So in that context, I would say Ballarat's rental market pressure is just moderate. And the rental prices didn't grow much over 2024. There could be many reasons for this slow growth in rents. One of them is that as sales prices come down and rental prices go up, more and more people find it better to buy than to rent. So more demand is attracted to the sales market, leaving the rental market. And on the investor side, as sales prices decline and rental prices go up, the rental yield has been improving since 2022. Back in mid-2022, the rental yield was around 3.5%. And now, after 2 years, it has improved to 4.2%. And in the short term, I believe this yield is going to continue to improve as rental price will likely outperform sales price, at least in the coming 6 months. Over the last 10 years, Ballarat's rental prices didn't grow as high as the other big regional cities. And the reason behind it could be very similar to why it didn't perform as well in the sales market, which is the oversupply issue. So where is Ballarat heading in the coming 6 to 12 months? Based on what we've seen in the 10 charts, Ballarat is still under low market pressure. We've seen signs of improvement, for example, the downward trend in days on market and the declining inventory. But the improvement seems to be slow. So in the coming 6 to 12 months, the decline is likely to slow down or come to an end, but we do not see a speedy recovery. Ballarat is moving towards its next growth phase, but the strong growth is more likely to happen in the coming 2 to 5 years, not in the short term. That was Ballarat in 10 charts. I hope you enjoyed it. If you have any questions or anything to discuss, leave your comment below. I'm John, the Senior Research Analyst here at InvestorKit, and I'll see you in the next video.